On today's report, we'll cover a new development in the Bilt Wells Fargo relationship, the bank that underwrites that renter loyalty card. They basically miscalculated how renters would actually spend their money. RealPage put out their first statement on the various class actions on their revenue management software. Centralization and what property management companies are using technology-wise to help with staffing turnover, and how rent growth affects the Fed's interest rate cuts. Enjoy. Before we get into this week's report, I wanted to give a plug for the Forum 2025. We just announced we'll be back at Terranea Resort April 15 to 17. It's a Tuesday through a Thursday. Very excited about this to run it back at an incredible, very special place. What are you excited about for next year's Forum?
So you're right, we're going back, and the goal is to take everything that we heard our attendees loved, and we're going to go bigger and better. And everyone says that, but the reality is that we're going to keep it intimate. We're going to open up a few more spots because the wait list is already ballooned. And we are listening to our partners in terms of they love the centralization topics. They love the sense of community, but we're going to tweak the agenda, more of those interactive sessions with our team members. And we also, because it was such a success, we're going to bring in some special guests. So we'll be announcing VIP attendees coming up soon. But overall, we are committed to making Forum the go-to event for the new operating model. Has nothing to do with funnel. We'll put it on. We'll throw the party. We're not asking for other sponsors. Please don't reach out. But if you are interested in the new operating model, if you're getting started or you're well down that path, this is the place to be. And then please reach out to us and let us know who would be your ideal keynote, your ideal band. I know Alex is all about Feature Islands, but we're going to go bigger and better, but keep all the elements that we loved from last time.
Whether you're a customer or not, and if you haven't seen the links, they're in Tyler or my posts. If you don't follow us, it'll be on the Funnel Leasing as well post. So more details coming soon. The Wall Street Journal had a very interesting article last week. Headline was, Wells Fargo bet on a flashy rent credit card. It is costing the bank dearly. This is looking back at their relationship with Bilt, one of the high-flying prop tech companies that actually had a consumer element to it. Basically, Bilt's valuation jumped to $3.1 billion most recently in January, up from 1.5 year and a half prior to that. The projections were that renters would use the card for more than rent. 65% they assumed would be non-rent payments, and those fees and payments they didn't pay off entirely would roll over every month. In reality, the ranges are somewhere between 15 and 25%. So it turns out renters are pretty good at paying their cards off in a timely manner. Tyler, we've talked a lot about loyalty, benefits to renters. We understand that at the end of the day, though, these deals need to pencil for both sides. I'm curious what you make of that article.
Yeah, big news. And obviously, we love it when our industry is in the headlines. And so a lot of folks that aren't in multifamily were talking about this story. We've talked about Bilt in the past, and full disclosure, we like the guys at Bilt. We're an integrated partner with them. A lot of our customers use Bilt. And we really like, as you alluded to, Alex, anything that moves our industry towards a world of more for the renter. And I think one of the points of the article was renters loved the idea. In fact, we've heard a lot of evidence that even since this article came out, more renters have signed up for that. Problematic for Wells Fargo as that may be, I think that the flip side is it did underscore that there is a real true misalignment of value in terms of renters want to be able to pay for a card. They want more value back, but there are real hard costs. And Bilt does not solve for that today in the long term with their Wells Fargo partnership. So obviously there's a lot of time left in that agreement. It runs until 2029. So I don't think any Bilt customers need to be panicked by any means. And I think Bilt and Wells Fargo both came out and said, we're working in good faith for a long-term partnership. So in addition to there being a lot of demand for this, I think one of the other takeaways is that renters are not a homogenous block, right? For a long time in our country, renters have been viewed as a tenant class, as low income, and in some cases, low financial literacy. And man, this blows that perception to shreds. I mean, the average credit score of the Bilt consumer is in the 700s. They are not carrying debt month to month. And so there are a lot of renters that have really good financial means, are incredibly financially literate. And so I think that's another huge positive from this story. I'm confident that we are going to evolve from what is the current Bilt renter Wells Fargo dynamic into a better long-term outcome, but clearly very newsworthy, noteworthy, and also a lot more to come, of course. You know, that agreement is again being renegotiated. So renters want more. Technology companies want to provide that, but the underlying financials need to make sense for both the renter and the management company at the end of the day, and whatever fintech sponsor is behind that.
And for now, they can enjoy some free lunch, which is nice for people. RealPage is back in the news. They put out a statement addressing all the narratives around their revenue management software and the class action lawsuits all around the country. So they pushed back and really pointed to a lot of what they claim were false and misleading claims about the company, its revenue management software. And this is really the first time they've come out very publicly in response to lots of things going on that are probably bigger than simply RealPage, but the whole manner in which multifamily looks at pricing, revenue management software. So Tyler, I know we hadn't heard a lot from these folks and there weren't a lot of stories for a while. People might have assumed various things were going on in the background, but I'm curious what your take is.
Yeah, we've talked about this story in the past. I think we'll continue to talk, and I'm glad that RealPage is putting their perspective into the market, another integrated partner that Funnel works with. And I think they are correct in stating that there have been many misguided or misleading narratives. And in fact, when we had Dom on the show to kind of counter our perspective of some of the positives we were seeing in this, he highlighted that there were lawsuits flat out trying to ban revenue management. And that really is anti-consumer. I think that revenue management as a concept is a win for consumers. It's a more efficient way to allocate to pricing decisions. That being said, what I am really interested in is I think the smart arguments on the case against current practices relates to the use of non-public proprietary information. And I think it's important to note, a lot of people don't know this. I used to sell LRO. RealPage, one of the things in question is, okay, RealPage owns the pricing market. And while that's somewhat true, they're by far the largest provider of pricing services in multifamily. They got there by acquiring LRO, and then they also had YieldStar. And those two price apartments, very different. YieldStar does fundamentally use, aggregated lease data. The way the LRO works is it was looking at traffic data. It was looking at more what you would consider public information or non-proprietary. And at the core of this question is, what elements of data can you use? And so I think RealPage is putting their feet down. They're drawing a line in the sand and saying, we're not only pro revenue management, but we believe the way in which we're doing it is fair. And I think that's the question that's going to have to be answered, whether in the individual lawsuits or the government action. And so revenue management's not going anywhere. That is my take. I've said that from the beginning. I think that the worst case scenario here for those who believe in the YieldStar model is that they have to tweak it. They have to change it. It has to evolve. But that's not a bad outcome either, because for years we know that LRO was a very good, viable solution that underlying it was really basic information that was not anonymized, aggregated, private information. So I continue to be fascinated by this story, the evolution of it, and another example of multifamily becoming more mainstream as an example of technology and how we embrace it. One last note that's interesting. A lot of the articles that have been written about this are focusing on the AI element, which there is an algorithm underlying the pricing strategy, but they're trying to combine the new generative AI, disruption that's happening with a 2 decades old practice of using an algorithm to determine pricing. So it almost feels like this is a quasi battle across, can AI be used in pricing decisions, when in reality, this is a tool that's been in place for decades. So sometimes those narratives certainly are wrong as well in the way that they frame the story.
NAA's online publication had a story also last week, Centralization Assists in a Staffing Shortage, by someone we've worked with, Bendix Anderson. Basically, the concept is apartment companies are using various new technologies to keep staff happy, an issue that comes up all the time. We haven't seen that go away. There were some really great quotes in the article from one of our partners, Christy Simonet at Camden. She said, there's no reason you need to be on site to take care of these types of tasks. In their case, her quote, we were able to eliminate the 170 positions, not people, because many of the positions weren't filled, and redeploy the remaining assistant managers to various other roles. So Camden created a shared services team. They had others kind of move around to work on things like budgeting and invoicing. And the reality was, not only did they redeploy folks in a more efficient way for themselves, a lot of those agents made significantly more in Camden's case, and the customer experience continues to be rated more than 90 points on average out of a 100-point customer satisfaction survey the company uses. So you had a panel on this very topic with Camden and others. I'm curious what you heard from those panelists last week.
Yeah, it's been really fun to emerge from the early days exploratory, no one really knows what's going on. You always heard these comments like, centralization means something different to everybody, or it's not yet proven. And those things could not be further from the truth if you really pay attention to what Camden and RMR and Cardinal are saying, and they said on our panel. Not only are they able to achieve cost savings, but Camden just won the Best Employer in Texas award. I mean, they are a stellar culture, which has been able to achieve financial outcomes, fantastic financial outcomes for their shareholders, simultaneous to having a great culture. The stat that they shared, and we shared today on LinkedIn, is that their turnover for offsite roles, so these roles that went from being an onsite assistant community manager to an offsite shared services role, went from about 30% turnover, and that's really good. Like 30% turnover on site is already best in class. That's what it is today. It's 10% for them in their offsite roles. So 90% of those roles are staying year over year. They're staying in that job. So better financial outcome, better employee experience and retention. And yes, you're right that renters enjoy it as well, right? So it is newsworthy to note that we have shifted from a world in which centralization is a buzzy term, it is a topic, and there's a lot of questions. There's a lot of answers now, and there's a lot of data. Now, that doesn't mean that the Camden model will work for everybody. They and Essex and MAA are REITs that can deploy centralization in a unique manner to them because they have kind of a single ownership structure. What's really exciting for us, obviously, and a lot of groups are in the middle of this, is centralization for third party. So what of those results, what of those models will apply to these mega managers, Alex, we've been talking about on the show? I think when we think ahead to NAA next year, Forum next year, that data is going to show up in really impactful ways. Our friend Don Beveridge is working an article on this topic as well. So anyway, it is noteworthy. Congrats to Camden, RMR, Cardinal, others mentioned in the article that have these real world centralization results, and they're achievable.
That panel I know was standing room only. And in fact, NAA had reached out and recorded separately just to make it available for the folks that couldn't be there physically in the room. So I know that they'll be putting that out in case people are interested in hearing a little bit more from all those folks that Tyler just mentioned. Last article we're going to hit is in BizNow. Rent growth is stoking some concern over the Fed's plans to lower rates. A lot of folks were told, and we all kind of expected maybe 3 rate cuts this year. It's now looking like maybe 1. But rent growth is a huge driver towards what they call shelter inflation. It's the measure of home and apartment rents. So that has been a big factor in delaying some of those expected cuts. Ton of new apartments coming online, a ton of new ones coming soon. Tyler, you're not an economist, but what's the crystal ball telling you on the future of some Fed moves this year and next?
Yeah, you're right. Not an economist, but there are several interesting factors at play here, some at direct odds with one another. So another, story that came out in the New York Times, Wall Street Journal, was that home prices had hit a all-time high this summer. And that actually is data that's about 2 months old, so it'll continue to creep up this summer. And so there's this inverse relationship, obviously, that we're seeing now where interest rates are high, they're staying high, and that's keeping buyers out of the market, which is creating this imbalance of, just not enough homes on the market either. And so that shortage of supply, the lack of transactions happening is keeping more renters in the renter marketplace. And so that's also leading to rent growth. All that to say, Alex, that it is not your parents, your grandparents' multifamily market. The elements at play here are dynamic. They vary by market. You may have a market in which you are just getting overwhelmed by new supply. Again, we're pro supply. That's good news. But where you're having to do concessions. You may have other markets, or you may have certain type of product in which your rent growth is going to be taking off. And we certainly think in a world in which new construction is down, there's going to be a lot of rent growth. So lots of different levers at play here. There isn't a crystal ball. We still don't know exactly how the election is going to play out. We don't know how many rate cuts there are going to be. And like you said, the inflation data is very messy right now because as rent growth goes up and home prices go up, that may mean that interest rates stay up. And there's an argument that it's a bad cycle that we're in. So all that to say, I think multifamily operators, multifamily technologists really need to be dynamic, because it is not a one-size-fits-all story. We are not in a terrible market. We're not in a great market. We're in a lot of both. And so the exciting part for that is that to me has led to a lot of enthusiasm and urgency from operators to adopt new technology, AI, to adopt a centralized operating model, because one thing is for certain, costs are still up and it is competitive. And so the ability to service your customers in a really high quality, efficient way is more important than ever, which, to your last story, is why folks like Camden, RMR, and others have turned to centralization.
I want to just test your Florida loyalties. Do you feel a huge sense of relief that the Florida Panthers staved off what would have been the biggest embarrassment in kind of finals history of any sport last night?
Yeah. So, Tampa Lightning are the better hockey team in Florida. We've won 2 Stanley Cups in the last 5 years. But I am happy that 3 of the last 5 came from Florida. And to really poke our Canadian friends, I'm very happy that they're going on 2 decades of not winning a Stanley Cup up north. I mean, I love Canada, and they have all the best players. Connor McDavid was phenomenal. But yeah, it is. I know it drives them nuts that all these teams from Florida keep winning the Stanley Cup. So yeah, go Panthers. Me and my kids were up last night rooting for them, and glad, they didn't completely botch it.
I hope this episode comes out right before July 4th. It'll feel very, very fitting that we're given that shot. All right, thanks. And a special treat at the end, if you were at NAA or missed it and wanted to know what folks were talking about, we just held a LinkedIn Live with Tyler and Ben Steward, co-founder of Revyse, on what everyone was talking about.
Hello and welcome in, everybody, to LinkedIn Live. Today we have a special guest, not only a funnel alumni, Mr. Steward, but also a repeat entrepreneur and special guest, special friend of funnel, but Ben Steward. Ben, welcome on LinkedIn Live today as we talk about 5 things everyone was talking about NAA. Couldn't think of somebody better to be plugged in, because you and I didn't get to talk because you were just talking to everybody. So anyway, Ben, introduce yourself to the crowd.
Thank you, man. Good to see you again. And thanks everyone for joining. I'm Ben. I'm the co-founder of Revyse. Revyse is an all-in-one vendor lifecycle management platform, helping operators shop for products and services, store contracts, contacts, manage relationships and risk. And yeah, we sit in a really fun place in this industry. We're kind of in between vendors and operators. So we get to kind of look at this through a really agnostic lens.
Yeah, exactly. That's why we needed to have you. Although you're our second favorite steward, but we are happy to have you regardless. And Ben, we're not going to make this a sales pitch of funnel or Revyse, but tell me, what is the most vendor relationships or vendor contracts you've seen with one of your clients? I'm curious.
We're onboarding a customer right now who has 4,000 contracts. That is across the whole organization, location level and corporate managed. But that is a huge lift and our current thing that keeps us up at night.
Excellent. Well, I think it probably keeps a lot of people up at night. If and when funnel has 4,000, I won't sleep at all. But grateful to have you on. Yeah. And so Revyse sits in this, as you said, unique perspective of both, and you and your co-founder, your wife, both have experience as vendors, obviously on the entrepreneurial side, Bobby as an operator. And so you guys have just a lot of conversations you're hearing. And so the whole point of this conversation was for us to really get a sense of what was being talked about. So when we were preparing for this, Ben, you had a first take that I actually really agreed with, but tell us kind of your first takeaway in terms of the feelings that you had this year at NAA that might've been different from previous Apartmentalizes.
Yeah, this was an interesting one. This is, I think, my 10th NAA. So I've been through like a couple of cycles now. And to be clear, I'm everyone's least favorite steward, and I've come to be okay with that. I've learned to be okay with that. Here was my first observation. Overall, it feels like the stakes are higher right now. Access to capital on the vendor side has changed, and that's now intersecting with this like softening on the operator side, right? So operators are softening rents, still high fixed costs, and it feels like these two have just collided. And so overall, I got the sense that there was this like level of almost desperation. I don't know that that's the right word, but a level of desperation, not just from the company side, but from the people side too, right? Like you've got sales reps and marketing and I think more talent on the market than I've ever seen before. So I don't know that desperation is the right word, but in the startup zone especially, there were people standing in the aisles trying to drag attendees into their booth. There was a guy next to me handing out, I think, enough flyers to kill the ozone. But overall, I just got this like underlying sense of desperation is probably the word I'll choose.
Yeah, well, too late. It's already in the cryon below, so you got to stick with it now. But yeah, and Ben, by the way, Ben, he is based in Bend, Oregon. I've had him come visit me in Tampa, Florida. And when you're talking about dragging back to the booth, I pictured those gators you're not fond of here in Tampa. Just the lurking. And yeah, I think we obviously, Ben, we're in the business of selling supply, and you are in the business of working with vendors and operators. But I understand the urgency, and I think you're right. It's the intersection of not a great multifamily market. Gone are the days of 20% rent increases, right? And certainly, I talked with more folks on the vendor side that are selling their businesses, that are looking for funding. Since you and I were prepping for this call, we heard one of the largest employers on the vendor side in multifamily, won't name names, had a big layoff recently, right? So it's a hard time, and it's not that different from, I think, just generally operators are dealing with slowing demand, like you said, but interest rates are still high. And so we're still seeing a lot of folks coming in from a demand side because they can't purchase homes, but costs are high. It's a strange market. It is absolutely a strange market. One of the things that I noticed of NAA is that a lot fewer of the operators fully registered. And so I saw a lot of people there that I didn't see their name on. And there was as many vendors as ever on the trade show floor, which obviously led to, more of us selling our wares, fewer operators on the floor. So anyway, I felt that sentiment as well. And I think it goes to, obviously, those of us who are on the vendor side, it has to be a mutual value proposition. People are going to want to meet with you. And one of the things that I certainly have believed in with Revyse from day one is that a lot of the shopping is not happening on trade show floors anymore. When I came into the industry of property solutions in 2012, we didn't do those email campaigns. I know we were all sick of the email campaigns leading up to it. You didn't need to, because everyone came on the floor. And so there's this kind of correlated relationship of, it's harder to get the meeting, so I'm sending more messages, which is leading to more desperation, and then fewer people attend the floor. But I know that's certainly something you guys see a lot, is that the buying process has moved off the physical floor in a lot of ways.
This might seem somewhat self-serving. 100%.
Sorry, I teed you up.
Right?
I made you do
you
it.
teed me up perfectly. So, I mean, obviously, we have a strong stance on this. Like, buyer behavior has changed a ton. It used to be that a lot of trade show business was done, right? Like, Apartments.com had little booths in their booth where people would come and write business, right? Like, that's just not how people are finding new vendors today, right? So, we have a very strong stance that discovery, that homework is done online now, right? Like, it's very difficult to walk through a trade show floor with 900 vendors that vary from seating to locks to vending machines to pet amenities. And I'd venture to say that, like, in any given one of the conversations that you did have that may have felt great, 1% of that trade show floor is in market shopping for what you do, maybe even less than that, right? Like, it's the proportion of people that you talk to versus the proportion of people that are in market shopping for what you are selling is very, very, very low. So yeah, our philosophy here is you're hoping for that moment of brand recall, be in market, or be visible when someone's in market shopping for what you do. Yeah, difficult to walk that trade show floor for net new business. Amazing for advancing existing conversations, right? You've got all of your operators under one roof. You can advance existing pipeline, but that net new side is really tricky.
Right. Yeah. No, and obviously we have an audience here, and we're talking about both multifamily vendors and obviously the renter dynamic. And it's the same, that we need to be building brand awareness when people are out of market before they're at that purchasing decision. So moving on to the second trend that we wanted to talk about, and I'll introduce this one because this is obviously right up our alley here at Funnel. The theme of centralization. That's obviously not a surprise at all. But what was different to me is that in previous conferences and over the last several years, you had a lot of folks, and by the way, there's still a lot of folks that say centralization is the wrong word, but as our friend Don Beveridge likes to say, we're stuck with it until something else it comes along and sticks. And with centralization, the overall sentiment I saw was less about is it good or is it bad, and it was more it's here to stay. It is an element for almost all operators, and therefore, how can I as an operator extract benefits from that concept? So we had centralization topics on how do I use centralized leasing agents with AI? How is this an HR benefit to me? How do I go about thinking about communicating restaffing, right? And so the bad word, the centralization used to be, to me, it's no longer a bad word. It is a part of our industry. And I think the vibes towards it, therefore, I mean, I was very fortunate to be on a panel with RMR, Camden, and Cardinal. And when they got off the stage, these are HR leaders for the most part, and one marketing leader, there was lines of people wanting to talk to them about how have you gone about this centralization. So centralization, no longer a bad word, is my first takeaway. But curious kind of how you guys are seeing that, certainly as you're talking with, both operators and vendors.
Yeah, we've talked about this topic for years now. Call it what you want. Call it specialization, role, career pathing, laddering. I actually heard the word specialization or centralization less this year than I think in prior years. And I actually think that's because it just is now, right? Like you don't hear we're cloud-based anymore. It just is. And I actually think that we're getting to that point with centralization already, where operators now understand that they can completely rewrite their standard operating procedures with the assistive technology. And it's happening, right? Whether it's happening in leasing or it's happening in maintenance or it's happening in back office, it's happening. And so I actually heard the word less this year because I think it now is just a part of what we're doing is just kind of accepted.
Yeah, completely agree. I like the cloud reference. That is absolutely the evolution that we're seeing. And I think as the comments note, I think both vendors and operators, again, are not deciding should they offer centralization tools, but more so what is the benefit? If I'm a vendor, what is my approach to us? What is the value out of our tool? And if I'm on the operator side, certainly it still remains very different, my operational strategy, right? Moving from an operating model that was what Cortland calls a vertical operating model, single property, and I staff it accordingly, to a horizontal operating model in which the question still remains. This is where the fun conversations are happening. Which jobs stay on site, which come off site, what is shared services? And if I'm a third party manager, what can I bill back to my client? Right. So I think it's an interesting process that we're going through here. And that actually, I'm gonna skip, or I'm gonna make this fun. Hannah loves it when I skip things, but I want to go to one of the other topics that you introduced, Ben, which is this idea of kind of pressure to consolidate, because I think that the word centralization to us is clearly multi-site operations. However, centralization of data, of aggregating systems is also something that can happen, right? And then a lot of vendors will use that and say, hey, we offer multiple tools, you can centralize your workflows on us. So I'm curious, kind of your perspective, again, unique viewpoint with multiple vendors. Are you sensing kind of, there's the famous quote that there's two ways to make money in software: by bundling or unbundling. So which era are we in, Ben?
Yeah, the way I've always talked about this in the past is like the industry goes through waves of all-in-one or best-in-class, and I've seen a couple of the waves where do we go just a full stack Yardi? Where I think the industry's landing, and I think this is awesome for the industry, is like we're all hearing about app fatigue, right? And that app fatigue is very real for on-site teams. The app fatigue is even more real for residents. So I think where we're landing is in a platform sale. So I think point solutions are going to struggle to get past certain ARR thresholds unless they broaden their product offering. I think that a lot of point solutions raise money at bad valuations, have high expectations, and I think we're going to struggle. I think the next 18 months, transparently, are going to be really hard for some of the younger companies trying to mature. I think we'll probably talk a little bit about the consolidation that we're seeing happen. But I think where we're landing right now is on the vendor side, far more of a platform sale, a far more connected ecosystem. It used to be about point solution integrating to PMS. It's far more now about point solution integrating into point solution. And in fact, having one cohesive interface for both leasing teams and residents to interact with.
Yeah. And obviously I teed you up before. This feels right in the funnel wheelhouse. And you know something about our sales pitch, but is that I think there's a balance, right? Is that the legacy software in any vertical often can lag behind in terms of innovation. But in order to really, operators want cutting edge technology, they want the best in class AI. And so how can I have both? And I think I will give a lot of credit to, what could be derisively called point solutions. They are advancing faster than ever. Like what I saw is that I think every tool in the industry is aware that they have to be, because of app fatigue, because of the slowdown in the market and budgets being cut, that I have to evolve my business. And so I've been really impressed at the pace of innovation from all companies. But I think what's going to be very interesting, to your point, is it is indisputable at this point that the multifamily industry will have fewer vendors in the coming years. There's less capital available to everybody. And so operators are going to have to make those tough decisions. And then the vendors are either going to break through and have a broader offering. And I think every technology tool is trying to do that, and they're able to do it quicker with AI, or they're not going to. And one of the things that certainly we have seen, grab the headlines, this is another takeaway, was acquisitions. Whenever there's M&A, Ben, you've been on the other side of this M&A before. And when this M&A happens, it grabs a lot of headlines, but it's also very telling about the moment in time that we're in. And so I think, to segue off the last point, I think this is very true that Calling AI was acquired by Entrata. That was a big story last week. And to me, my takeaway, but I'm very curious of yours, number one, AI is obviously here to stay. Every company, large or small, needs to incorporate it in their tool. If you're a single product offering, you still need to be adding AI and AI data insights to your product. But also, that was a company that was essentially, a single value proposition for most of the industry. I'm sure they had other things, but I only knew them as a rent collection tool, right? And they were first to market on that and grew quickly because of it. And now that's a evidence of, a lot of these single thread companies are great acquisition targets and bring that value and introduce the value to the market. But anyway, curious, kind of the headline was, another acquisition multifamily. Had been a little bit slower on acquisitions for a while, but I think it's probably a sign of things to come.
Yeah, I had a really cool mentor once. It was an Oracle guy, and I I called them Patrickisms. His name was Patrick, and I've got a list of Patrickisms that he shared with me over the years. And one of them has really stuck with me. And he told me that the products that are closest to the consumer are the ones that innovate the fastest, right? Like the consumer expectations evolve far more than back office do. And I think we've seen that with this acquisition, right? So kudos to Entrata for recognizing that the pace of innovation has accelerated with point solutions. Kudos to Colleen for building a product, being first to market with it, being category leaders with it. I think it's going to be very interesting to see. I mean, we saw Entrata hire corporate development a couple of years ago. They positioned themselves for this moment where they've just acquired Rent Dynamics, they've just acquired Colleen. It'll be very interesting to see how they integrate those systems, how they integrate those teams. This is a whole new world for them, and they're kind of following that RealPage Tomo Bravo playbook. It'll be very interesting to see how this unfolds, but I think this makes a lot of sense in terms of acquiring that innovative point solution that is closest to the consumer. I like to see this one.
Yeah, no, and I think that, like you said, Entrata now, their playbook looks a lot more akin to RealPage, where we were used to. As a former PSI Entrata guy, it still feels crazy, right, that they would be doing acquisitions. But in that transition that's happening, I think that for operators, there is more urgency than ever to, as you said, kind of create your own platform. Because what we saw in that acquisition strategy is it helps the incumbent PM softwares identify category leaders, right? But also for those of us that are in the business of trying to improve the industry and bringing solutions, whether or not your company ever plans to sell, M&A is a good thing, right? It means there's liquidity, it means there's capital, it means there's growth, it means there's value, right? The fact that so many dollars went to a tool, a budget, I mean, you talked about kind of app fatigue. 3 years ago, nobody was spending $1 per door on collection software, right? Clearly, the market changed. Collections became incredibly important. Entrepreneurs adapted, brought products to market. Customers paid for those. And all of a sudden, we have a new value proposition, right? And one that, candidly, I think is better for renters, that they're aware of the rent, right? Better than getting an eviction notice, better than putting them into a collections plan to keep those payments coming on time. So I agree. I think it's a good sign. Our industry obviously has a reputation, Ben, of lagging behind. And I think as capital has come into multifamily and the proliferation of AI tools, my opinion is we really don't lag that far behind anymore. I mean, give me an industry right now that is doing more in AI than we are. Like the ability to keep pace, because there's more capital and because the tools are becoming democratized, like we are much more akin to every other vertical, which is great news for the renters and for anybody who loves this industry.
I couldn't agree more with that. Something you just mentioned a while back, you mentioned that you thought maybe in the future there will be less vendors in real estate. I don't know, man. As we enter into like no code applications, real estate's one of the most attractive verticals to be a part of. I think we're going to continue to see a proliferation of providers. I think we're going to see some consolidation. And unfortunately, I think we're going to see some tail off. And maybe that leads back to the desperation comment, right? Like you've got one of three paths in front of you. So yeah, we're
and
seeing it all unfold real time.
I agree. And I think it goes back to the same point that I was making about the multifamily industry, right? That right now we are seeing a very unique market in that there's a slowdown because there was more supply coming to the market, but those high interest rates are, which is also creating more demand, is simultaneously meaning less starts, which means that the imbalance will probably lead to the same type of market we had 2 to 3 years ago. So yeah, but in the short term, you're right. There's pain, there's urgency, and making important technology decisions is more important than ever. On the positive note that we just talked about with, kind of the overall direction of the industry, more innovation, more tools, great for entrepreneurs, great for operators, great for renters. We kind of had kind of a negative comment about maybe a little bit of desperation at the outset, but I you shared something with me that I really appreciated. So what was kind of your biggest takeaway though on the overall feeling of the community?
Yeah, this is cool for us to see because again, we sit kind of agnostic. But man, I've never seen this industry be so collaborative. Like we're starting to see everyone come together. Vendors are friends with vendors. Like there's less, it feels like there's almost just a stronger sense of community than I've ever felt before in this industry. Like our best takeaways from NAA were all outside of the show floor, right? It was the events, the networking, the be in the room where it happens. Like there was so much good face time in this industry. And it's not just vendors to operators now, it's vendors to vendors. Seeing what HappyCo did with their open marketplace, seeing a couple of innovators like Venn come through with what promises to be a very open marketplace as well. Like we're really starting to see this whole thing gel and support each other too. It's like vendors are high-fiving each other, which is amazing to see.
Yeah. And I think I want to, there was a comment that I want to address, but I'm going to tie it together with your comment. I agree that the community and the sense of ecosystem, and one of the things that I love about multifamily is that by and large, people stick, right? I mean, you've seen it, I've seen it. A lot of people come into the industry, even if they leave, they come back. It's a place for great people. And I think that's because at the end of the day, we're serving people's homes, right? And you can't help but feel that you're a part of that in some small way. And so I think it attracts really high caliber people. And so it's really cool to see repeat entrepreneurs, who've worked in different startups and maybe they're at a bigger company and they come back. I think there was a question about, as you're selecting tech vendors, and I'd love for you to address it, Ben, as well. But from my perspective, it's a real thing that I would think a lot about. I mean, I think about it when we pick vendors for funnel of, the longevity of this business. And one of the things that really matters to me is looking at the ownership structure. And this is a small enough industry, you should probably be able to figure that out. I mean, it's just like if I was an asset manager, I would want to understand my third party managers, incentive structure, how to use your team get paid. Your vendor should be somewhat transparent or you should be aware of, are they private equity owned? Are they venture capital backed? Are they a public company? Are they a private family owned company? And not that one is better than the other, but it certainly tells you a lot about the strategy. And especially there was a question about, I want to pick a technology. Maybe it really does matter. You don't want it to be acquired and nobody has a crystal ball, but looking at the ownership structure, the management team, the board, the cap table, which I certainly can say I have that conversation a lot with people as they select funnel, should inform the reality of what steps may come next to you in that business. So I think it's fair game to talk about, but I'm curious, Ben, maybe to toss it back to you. What are things that you would look at when you're picking, especially kind of in a new market? There's a new emerging technology and you have to be pretty agnostic here. So maybe, but what are the factors that would matter to you in terms of, aside from does the product meet my needs, most importantly, but at the business structure level of, selecting a vendor?
Uh, I feel like this is maybe another tee up because again, we're pretty passionate about this. So with Revyse specifically, we've honed in on things like the integration ecosystem, right? So as you're shopping, you're doing your homework on the providers by category, you can see verified integrations that company has, not product to PMS, but product to product, right? So does Funnel integrate with Ingrained Sitemap? You can see that before you even reach out to the funnel sales team. Capital, right? What was their last fundraise? Are they well capitalized? What is their burn? What is their runway? We actually include now fundraising status on Revyse as well at the product listing and vendor page level. And the third, and again, we're passionate about this, is reviews. So this millennials now make up the bulk of B2B buyers. It's less blue suits and handshakes than this industry ever was, and more about like sophisticated modern B2B buyers buying software. And this group is conditioned to reviews, right? They're conditioned to Amazon. And so having that transparency in product level reviews from authentic multifamily users, we think is another big plus. Transparent pricing, self-guided demos. I think there's a lot that can be done now to aid in that shopping journey that just can't be done on a trade show floor.
Man, I love it. And I told you this, Ben, when you went to go start this company, that the industry needs this, right? And I think in particular, because I always kind of laugh when people ask us for references, because I'm like, well, I'm going to give you my best references. And we think they're great and you can hear it from them. But that's not how I shop, right? I wouldn't go to Verizon and how do your customers feel about your phones, right? I love the natural, organic process. And I think there's obviously in the chat and in general, a lot of interest in integrations. It's a tough topic. I certainly think funnel sits somewhere in between big company and small company, where I can appreciate, and there was a question, I can appreciate that managing integrations is incredibly challenging for every organization. It takes a lot of time, because when my partners approach us and say, hey, will you build this integration? The answer is always yes, but it means we're not building something else, some new feature. It's the same resources, right? Generally speaking, though, there's a comment or a question about, kind of pay for play. I am not opposed to pay for play. Funnel doesn't do it, but we don't think it's bad that other PM softwares do it, so long as they're supporting it. And the biggest thing our industry needs, and it goes to your point about kind of the leadership of our industry. I like the blue suit handshakes versus the millennials, but we need to continue to raise the bar on standard integrations, which includes educating ourselves on what that looks like. What is an API versus what is a webhook, right? And I think that candidly, most of our legacy accounting softwares, their 20-year-old integration structure needs to be updated. And so I think it's okay to apply pressure and say, hey, great, there's fees here. Where are we going? And I will say, holistically, we're going in the right direction. Appfolio has a modern API structure that includes webhooks. Entrada has announced, they're now charging, but they're going that way. Again, directionally correct. And I think even RealPage and Yardi have said, yeah, we're not opposed to any of that. But just like us, every innovator, every entrepreneur, your roadmap is dictated by your customers. We all know that. We need to continue to apply pressure to higher standards, because the legacy integration technology is just not good enough for what modern software needs, for APIs, for AI, for customer experience, like everything that the standard, like you said, for consumers is up here. And so we can't rely on 1980s API technology anymore. So that's my soapbox. I'm okay with the fees.
Well said. I mean, as a startup, we're experiencing this firsthand ourselves, right? Like the cost of integration is almost prohibitive. It's hard. So yeah, couldn't agree more with your sentiment.
Excellent. Well, we're going to wrap on Ben's last take, which is that the sense of community, this industry is palpable. I think even just by this LinkedIn Live, we sense it. My biggest takeaway is I love this industry, right? There's times where you think as an entrepreneur yourself, Ben, yeah, there's a million different areas that optimize the world, but this is fun, right? Like we are really all trying to improve the renter experience. We're trying to help our partners. So thank you, Ben, for bringing your community, for bringing friends here to talk about this, and I look forward to your continued success, and everyone that joined us. Thank you for your time.
Thank you for having me. That was fun.